Hi guys, quick update here for YouTube, 24th of June 2025. If you want to know more, just come and join the group. It's cheaper over 3 months, and if you pay via crypto, just message me through the Facebook page. If you want the full a version of the educational course, everything's here, and for those who join over the next week or so, you get 1 month's free access to the group. And we are going to get a part 2 to this course here, or hopefully before the end of the year. Now we want to have a quick look at the S&P followed by Bitcoin. So as you guys know, we've sort of offloaded leverage positions. We're still long single SPY ETF. We recognize the BS, all this Trump tariff, World War 3 and recession. The only recession that's going on is people's ability to read a chart, in which case we're in a grand super cycle depression 1929. Okay, learning how to read a chart is extremely important, and if you know how to do it, you can then convert steel and iron into gold effectively, right? You can effectively produce alchemy, right? So that's exactly what we're doing here with this cash machine that is soon to top S&P, but not yet. So we have maintained the target here of 4/6s, the exact target we've shared with the group. As well as that, we have extension targets, but for YouTube audience, we are still going to go higher here. We've offloaded leverage positions, still holding SPY single ETF. Ultimately, we're now in the last wave of mankind before a catastrophic collapse. We could easily go to 3/6s from 4/6s. Like I said, we do have extrapolated targets above that. The market is bullish. We're probably going to make new highs here the way things are moving. We did think there might be a subtle correction. I don't really think it matters. Ultimately, the market is still going to go higher. It cannot be impulsive. It has to break down in 3 waves. So we're looking at 1, 2, 3, 4. If that's not the 5 in, all that is a 3, then a 4, then a 5, then a larger correction, and then we're going to make one more move up here. So there's no real change here. That's been a fantastic move there. Fantastic trade, fantastic investment, whilst everyone else was panicking. But like I said, the biggest concern that I see, the biggest stock, the greatest stock in the history of mankind, other than probably Nvidia, that's obviously not going to make a new high. So never has this ever occurred in human history. So we have a problem here, and I think that goes all the way to 53 easily when the market turns, right? So we have a situation where the stocks are doing this. Like I said, it's far longer the days where it's an S&P 500. It's more like an S&P, 4.5, and now it's like an S&P, 2.5. So Microsoft's going to go higher, but Apple is the biggest concern. So Microsoft should be able to get to those higher targets. I believe it was 550, which we had up there, and recently we've been in circles. So if you're not in the group, you're missing out on these huge sort of moves here. I actually still think it can go higher, whilst there is some selling here. To me, all of that is basically completing more of a way through. I've actually got a target here of 480, believe it or not. So that's a very good short at 480. We identified the circle partnership with Coinbase 2.5 years ago when we were buying Coinbase at 36. So once again, you buy low, sell high, and you run for your life. So we've explained our thoughts on Coinbase. Circle is going up. Bitcoin still looks bullish. S&P looks bullish. And we were buying into here, so far gone are the head and shoulders targets. We've already killed all of them, but we've spoken about this sort of mirror image. So imagine there's a mirror right here. This is this, this is this, this is this, and now this is going to be this. So all-time new highs in Coinbase, to me, that has to be a sell up there. So there's no reason that can't go higher then with the Coinbase partnership and with the Circle partnership. Coinbase produces a lot of money through basically interest income received on USDC deposits as stable coin, and it's on their supplementary income, but it's increasing, and we recognize this 2.5 years ago. So anyone who's not been in the group the last 7 years, you've missed out on 7-8 figures there. But minimum, even the last 2 years, this last low in the S&P was absolutely incredible. This 2023 low where we got Zion Bank, Nvidia, Western Alliance, we were in all of them. So anyway, to summarize S&P, so it's still going to go higher. It's 4/6s, and then we're going to reassess the count. The exact count we have is on the Facebook group, as well as extrapolated targets, and we have an exact timeline as to when that is going to occur. The fact that Apple is not going to make a new high proves to me, validates the fact this is the last wave of mankind before a catastrophic collapse, which they're probably going to blame on some external circumstance. But ultimately, the stock market already foretells us of all of this, because Elliott wave is Elliott wave, and there's no real argument. So regardless of what else is going on elsewhere, this pattern has to complete itself. So, and then once it's complete, that's it. It's all over. Market's going to go down, and it's going to drop quite quickly, and that, as far as I'm concerned, is $1 billion short. Looking at the pound, so we're still been bullish pound here. Obviously, people are trained to buy US dollars when there's any kind of geopolitical crisis kicking off, but the long-term dollar trend is still clearly down. If you have a look on this on the futures here, where we get the real volume, we are really, really struggling there, and we're not even at the mid-pitchfork line, which basically, if you just track that down in the same kind of angle, that gets you, what's that, 88, but really it could get a lot worse for the US dollar here. So this is a catastrophic undercover debt collapse and dollar collapse. I see no reason why that can't go to 66. Everything's going to go to 66, plus a couple of other sixes depending on what you're looking at. So S&P 4 sixes, final target 3 sixes, dollar 66. Bitcoin, I won't tell you that how high that's going to go before it eventually goes to what's that guy's name? Pinner something, Don Pinner, the guy who calls him the self-made billionaire. I forget his name. I don't follow all of these gimps on Twitter. He apparently says if you ever find out who owns Bitcoin, it's going to go to 0 the very next day. So fascinating. Hopefully someone in the comment section can enlighten us with his name. Okay, good. So Bitcoin, ultimately it's bullish. We said for YouTube 140, the exact wave count we don't want to share here. That's only for group members. We know exactly where this is going to go and when it's going to go. And as we always say, cause is proportional to the effect. The effect obviously is up. We're looking at a huge effect here, right? So if you were to work that backwards, obviously the market has to develop a cause, right? Cause, effect, cause, effect. So this is the cause. In fact, it would be odd to go to the targets that we are thinking about in the group without it at least going sideways. So all of this is healthy consolidation. We've not really too fussed about anything that's going on here. You could easily read that as a WXY complete. If not, it's going to go into another X wave, then another move down, and then it's going to go higher. The fractal, I suppose, if you wanted to use it, is probably this one here. You could just condense that down, assuming that it's not already bottomed, which is quite possible. So this wave is this wave, then one more wave up, so one more wave up, and then one more wave down. So we'll just condense that all the way down. So something like that, yeah? So, just watch out for a bit of a curveball here, just in case they chuck that in. It doesn't make any difference, really, okay? We know June and July are historically quite pathetic months for Bitcoin, okay? We've spoken about the altcoin dominance and the Bitcoin dominance. So just in case they chuck that curveball there, to me, it's looking awfully like this fractal here, right? So let's just follow that thinking through. I'm not saying it has to do this, right? We don't care. We've been long since about 90 grand here. This could do what it likes. We don't care. We know exactly where it's going and by when. But if they chuck in a curveball, let's just say hypothetically, when is that? That's next week, right? So finishing this quarter, 109, start of July, Independence Day, whatever, July the 4th is sort of, what's that? That's too much of a move up and a move down, all in the space of, let's just drag that out a little bit, yeah? That was the low, wasn't it? Then it comes back to retest, then it goes higher. So what we can do, let's just drag the entire thing over. Let's put that into a different color. Let's put that into orange. And let's overlay these two guys on top of each other. I'm not a huge fan of fractals. I think sticking to Elliott wave and what we teach is the way to go, because you can really get yourselves into a lot of trouble thinking you're seeing things that aren't really there. I'm just putting this out there just to give you a heads up that just in case this move is another fake move up to 109, that might be a quick sudden whoosh down to 94. This is suggesting it's going to do all of that in the next week, which I find unlikely. It's probably going to get dragged out into July, Independence Day, 4th of July. Then we kind of piss about here till the 8th of July. Then we kind of go here to the 17th. And then eventually we kind of build that inverse head and shoulders target, yeah? That's the neckline and the similar kind of thing, right? So you can see how something like that could happen. So I'd be very careful with fractals. Of course, Elliott wave is fractal in nature, but you've got to be careful just bars patterning copying random crap from the past and just sticking it on. But it's important to understand what's happened before. There's no doubt the market is fractal in nature, but following the exact timings of these moves can be very dangerous, okay? But something like that could easily happen. So it doesn't change our medium to long-term count. The market is still going higher, but I'm just putting it out there. Some more sideways BS, some more sideways consolidation. And like I said, we are looking for a very large effect. For the sake of YouTube, we've said 140. We know exactly how high it's going to go. And we've shared that on the group and exactly by when. So I don't see any real issue here for Bitcoin. I don't think you can call a grand super cycle top just yet, and I don't think you can call a major crash from here. You know, I've heard some commentators, you know, the count that I always see is a 1, 2, 3, 4, 5. So you know, I don't think you can really call an end to this market move just yet. And the Bitcoin dominance, well, we've said for the longest time. I mean, what do you want me to do or say here? We're going towards 70%, and then, well, I mean, we've spoken about this at length, ad nauseum here, ad nauseum. We've spoken about, you know, a catastrophically large altcoin season could take place, right? As far as I'm concerned, to at least the 50% of 36 to 73, that's about 55, then a retest off the lows, and then technically, if you were to run the algo target to 23%. So as far as I'm concerned, we are due very soon either a very good altcoin season, an incredible altcoin season, or, oh my word, the biggest altcoin season in the history of mankind very, very soon, but not yet. The market has to go high, and here, everyone, every milkman and postman all over the world, they have to sell all of their altcoins. They don't want to do it. Well, no one wants to do anything. Everyone wants to make money, but it doesn't work like that. That's not how this game works. 99% of people have to lose. And the ones who lose are the ones who don't know Elliott wave. They don't know volume. They don't know how to read a candlestick. They just watch the news all day long and they don't understand opportunity cost. They've got no idea about risk and reward, or how to play options, or how to trade ETFs. They just don't have a clue. So 99% of people have to lose money for the 1% to make money. Unfortunately, that is the way of the world, and that is the way of financial markets, which in effect are the world. Okay, these random squiggly lines control more than you think and more than you know. Ultimately, the headline has to be, easily by Labor Day, altcoins are dead, altcoins are going to zero, and if anyone really thinks Bitcoin's going to approach its grand super cycle top, and the S&P is going to approach a grand super cycle top without the altcoins having one last hurrah, then you're very much mistaken. To me, the altcoins are making a big comeback here, just not yet. We're still not there yet. 70, ideally 73. Why? Because the 19 high ran the 17 high, and the 21 high ran the 19 high. So which high do we actually want to run? Not the 17, not the 19, but the 21. Hence 73. So what we're looking at is effectively this, an up and over S-curve bomb. Like I said, very good altcoin season, incredible altcoin season, or potentially the greatest altcoin season in the history of mankind. Don't forget, we need to get another set of milkmans and postmans trapped at Bitcoin at its actual top. The top isn't obviously 140. I can't give away the exact top because that's unfair. So they're not going to buy. No one wants to buy multiple hundreds of thousands of dollars for one Bitcoin. People are going to get FOMO'd into the altcoin. So we have to have an altcoin season, if for nothing else, to bring in that euphoria, bring in those normies and that retail flow to basically buy the top. Unfortunately, someone's going to go broke here in Bitcoin and the S&P, I would say over the next year. You buy the S&P at 4.6s, that's a guaranteed bankruptcy within 24 hours, easily. That's the greatest short of all time. Same thing happened in 01, same thing happened in 87, and in 2008, and in gold in 11, and in gold in 1980, and in gold soon to top. We don't want to share the exact target in gold. If you want to know more, come join the group. 1929, and all the millions of other tops. The tulip bubble top from the 1600s. Same thing again and again and again. People just can't help themselves. But the ones who get really torn apart here are the ones who basically have never looked at a chart in their entire investing life, and suddenly something comes up on the news, and that kind of news flow is repetitive and it's addictive. and people get suckered in at these incredibly unfavorable prices. But we're not there yet. I mean, but to me, the headline as regards for the altcoins, that is coming. It's going to be something along the lines of the altcoins are dead, sell all of them, and then there's an evidence, there's a justification to rotate slightly. Doesn't change the count on Bitcoin though. We've maintained at most for the last couple of months, one should have maybe 5%, 10% max altcoin exposure. As we go into our target, effectively 70 to 73%, and we look for that headline, and everyone's panic selling their altcoins, then there's more justification. For some people, might be 80-20, 70-30. Personally, I wouldn't go less than 65-70 with Bitcoin, to be honest, because Bitcoin is nowhere near a top. Bitcoin is nowhere near our target. Obviously, once it approaches our target, then it's a different story altogether. Forget about trading into altcoins. We have to trade into US dollars and pounds and euros and everything else and get the hell out there before a very large crash is going to ensue. But we're nowhere near there yet. But things can change very, very quickly. You know, this is a very important year. The next year is probably the most important year of anyone's investing life. So if you don't know what you're doing, you want someone to sort of lead you through that, guide you through that, come and join the group. Everything's discounted. Get it while you can, because once the retail flow starts coming in, prices invariably are going to be going up. Anyway, that's the issue with the dominance there. Altcoin's going to continue to bleed. But boy, is there a comeback for the altcoins. So basically, just to go off the whole bars pattern again, we're looking at one of these guys here. That's what we're looking at here. Absolutely incredible. Because as far as I'm concerned, that is the biggest flat in human history there on crypto. All of that is an ABC flat, in effect. Could be a WXY, no one cares. It's a three-wave correction. After any three-wave correction, we must have potentially a continuation of the entire trend, hence the move towards 25, or as a minimum, we go to the 50%. Failing that, we then go to the range lows off the B wave low. And that's just Elliott wave. There's no argument with that. So you can't call altcoins dead yet. However, they're going to continue to bleed in a dying way for quite some time, but we're getting close. We're already at 4-year highs here on the Bitcoin dominance. So the headline's coming. The headline is coming, which is basically going to say FOMO into Bitcoin at an unfavorable short-term top and sell all your altcoins, and then basically there's going to be a big rotation there. And if we get anything like 17, where we called all the moves, or 21, where we called all the moves, well, then you want to be joining the group. So have a look through our previous videos then. So is there anything more to add here? I don't think so. So if you want to know more, come and join the group. We've covered everything here today. Some interesting stocks as well. So we cover everything. You know, and obviously these are not the real charts that we share with the group. We share actual targets and elite wave and everything else. So it's been a very good quarter, frankly, with this dip. That was an unbelievable buy. And we've covered SPXL. I mean, we've offloaded a lot of this plus the leverage. But we have said, eventually, the target's 190 and 210. You're not really supposed to be using this as a long-term flow. Some people do, but as an aggressive swing trade, it was very, very useful. And that's where you want to use it. Aggressive in, aggressive out. If you get too passive with these leverage ETFs, they can really hurt you. Going to time decay, killing corrections, as well as these huge drawdowns. But a chart is a chart, regardless of the decay. These highs I don't like. These are fairly poorish highs up there, and we've said that from the lows. That was going to go to 190. And we've said it's very hard to find a double out there. And we've covered a few other stocks as well. So if you want to know more, come and join the group.